You're listening to Only in Seattle.
Do you have an exit strategy for getting out of specific properties? And then do you have an exit strategy for your business in general? What does that look like?
Yeah, so actually, because I'm buy and hold, one thing is, how do you roll up? In other words, how do you get bigger? How do you go from buying the 1 to the 2 to the 4 to the 8 to, and do that kind of stuff? And you could sell, and if you sold, then you can do something called a 1031 exchange, which is basically, for your listeners, I know you're aware, but for your listeners, it's a tax deferral strategy where you don't have to pay taxes and you can roll it into another property, or you can do, which is what I generally do, or you can, if you have appreciation built in, you can do the cash out refinances. So that's what I've been doing recently. So in terms of my exit strategy is actually not to exit, but it is to get value out of the properties on the appreciation side. Again, I'm not an appreciation investor. That's a cherry on top. But when it happens, like it's happened recently, I take advantage of it. And that enables me to buy more cash flowing properties.
So you do a cash out refinance, take that money
and invest it in another property.
Buy another property.
Yeah, exactly.
And just keep that going.
And that way I still have my first property. Now, there's a little bit lower cash flow on the first property because I now have a higher loan.
Right.
But
because you've taken out some money.
Exactly.
You borrowed that.
Exactly. So I have a higher loan balance and with a higher loan or a mortgage payment. However, I make more than that. In other words, my next investment makes more than that from a cash flow perspective. And now I've magnified I'm now paying down 2 loans, so my net worth is going up every single month, and I'm getting all the tax advantages on 2 properties every single month. And I'm now, if I start with a 20 unit and I buy another 20 unit, I'm now when each of them go up $25 a month, in rent, if just do a $25 a month increase on a lease, now it's 25 times 40 instead of 25 times 20, so everything starts multiplying.
You're magnifying those numbers.
Yeah, but I'm not actually selling. Like I have sold a few, but I generally prefer to keep.
So you're keep and hold on and work the equity you've got.
Yeah.
And kind of keep. Do you have a magic number when you want to shut everything down?
I do not. So basically the first key milestone was getting to a point where we were very comfortable just covering our expenses, building our new home in a nice location, being able to travel.
On Whidbey Island.
Yeah, exactly.
What part of Whidbey are you on?
Coopville.
Oh, okay. Yeah. Okay.
Yeah, we.
And how'd you pick Coopville and Whidbey?
Well, I moved out to this area about 20 years ago. I'm originally from the East Coast, and but I like we were talking about earlier, I picked this area. I actually said, where do I want to live?
You're one of those guys.
Yeah, exactly.
Says, I like the lifestyle. I like everything else going on. Maybe
and I found a job here. In other words, I actually picked the location and then found a job. I want to live
and work there.
Yeah, I wasn't pulled by a job, which a lot of people are. They get a promotion, they move somewhere. I picked where I wanted to live. Anyhow, we're very outdoorsy, and my wife and I would visit all these places, and we kept coming back to Whidbey and said that's where we want to live. That's just beautiful and has a really nice community. And then about 7 years ago, we purchased the land that we're building on. Even before we moved to the island 4 years ago, but even before we moved there, we already owned the land we were going to build on.
That's a great location. So did you take the ferry here today?
Yes.
Mm-hmm. Okay.
Yep.
You did take the ferry.
Yep.
Okay.